Good evening and welcome to tonight's live webinar, member-only content where we look at ASX investments opportunities in review for the 2nd of August. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which incorporates access to our model portfolios as well as an independent portfolio where we work in partnership with you to execute ideas that we jointly agree on, and within that portfolio structure, if you like, we have access to derivatives to enhance portfolio returns. Popular strategy there is the covered call strategy, so owning blue chip stock, selling covered calls over the top, or equally as a stock replacement strategy, buying call options or buying put options. So if you'd like to know more about the broking account services and the various strategies that are available, please call me on 1300 614 002. The technology that we're using tonight is the Investor Signals member area. You can subscribe to it for $1,320. For clients that are joining us for the first time this evening, or maybe part of your 30-day free trial, please don't hesitate to contact me in the office and I can provide you some further tuition on how to navigate the technology and set up your model portfolio alerts. For further detail on the products that we provide, please visit our website, and you'll find more information on our three main services, which is the research service, the brokerage account, and the managed fund. Starting tonight with a look at the US stock market, and in particular the Nasdaq. So coming into my watch list, I have that set up here, and we'll have a look at the Nasdaq, the S&P, and then move into the XJO. The Nasdaq continues to make higher highs and higher lows, so until we see this sort of roll over and break that pattern, we continue to shuffle the support lines up and assume that positioning for portfolios should still remain bullish until such time as we see a breakdown of that higher high, higher low pattern. In the case of the S&P 500, similar, making higher highs, higher lows. The recent low there at 4,200, we've now rallied about 200 points, or about 5% from that level. And until we see that market trading below that average, that's our first sign of caution, and I'll draw your attention to that on the blog. If we look at our local market, we had a strong day today, so continuing to push higher, higher highs, higher lows. The support line sits under there at around 7,200. You probably even run this up a little bit tighter at the moment, so it wouldn't be until we see a reverse back below about 7,350 that you might start to think about taking some risk off the table within portfolios. But for the moment, the bullish momentum continues. This evening, what I wanted to do is have a look through a few different lists, and next week I'll go through the full 100. But this evening I just want to draw your attention to a couple of things within the technology. So if we wanted to be familiar with what we've recently posted on the blog, click on the news button here, and I'll just go through this. So today we spoke about ETFs, the Global Robotics Etf. It's performed well when you look back at the performance of the algorithm signal previously. Again, if you're joining us for the first time, these green boxes at the bottom are the primary algo signals, and it's those boxes or those signals that feed into the model portfolio, which I'll have a look at shortly. But the coverage is often on ETFs, ASX listed ETFs, as well as ASX top 100 stocks predominantly. And going through the blog, we're looking at the Global Robotics ETF, just highlighting the higher low there at around 1350. Looks like a bullish setup. The Video Gaming ETF under algorithm bias signal recently there. The iShares Asia ETF, so this gives you exposure to the top 50 selected by market cap within Asia, so not just sort of Chinese listed stocks, although they do make up a large part of the top 50 given China's weighting in the region. But there are other companies as well. The performance of this top 50 index has done extremely well over the last 4 or 5 years. The recent pullback that we've had from 130 down to 110, that's in part because of the softness we've seen around Chinese tech stocks. Alibaba reports earnings tomorrow night in the US. It'll be interesting to see what those numbers look like. From a quality standpoint, Alibaba's really the only stock at an individual level that we're holding an exposure to, but we continue to be willing to keep the IZZ and the Asia Tech ETF as exposure, and now this IAA now sits in that portfolio as well. So we started buying this today ahead of Alibaba's results. Gold Roads remains one of our preferred gold stocks, although Northern Star sits as a preference over that. So looking at the blog there, we had the switch from sell conditions into buy conditions, bouncing off that 125 support. PEX has been recently spun out of Link, which is the property settlement technology. So it is expensive. Link, it trades on a extremely high P multiple, but it is a high quality business, sought after asset. We'll either see them expand into international markets, or we may see them actually acquired by an offshore company. So you can have a think about it. Given that it is trading on a high PE, just keep the position size in context of your overall portfolio. And you can see here that I've articulated that it's more of an accumulate strategy. It's hard to get a real sense for where true support is, given that it's a new listing on the market and it does trade on a high PE. But I do think it's something that you can have a think about if you're running a large portfolio and you're wanting to have some exposure to technology. I think PEX is an alternative there. I do think that the runway for growth there is substantial. Cleanaway, we like this as a defensive asset, not particularly exciting, but buying it on the dip from this sort of 275 back to 250, so just been drawing your attention to that. Northern Star, we've covered a fair bit of that. Then you get into these blog posts at a slightly different heading. These are automated that come out of our database system, and each morning we're just highlighting that there's been changes to the models. Now you can go into the model portfolio and customize those alerts. So you would do that by clicking on the model portfolio button and turning on the envelope. So the difference between when the envelope is grey opposed to when it is green means you're going to get the notifications. So you can go through that list. They are individual, so each one you would need to go through and turn on that envelope. And you see there it's now green, so you continue to go through that list and turn them on. What that'll do is each morning you'll get a separate email just for the changes to the model portfolios that you're tracking. The post here on the blog is simply, there's no customization with this particular post. So the customized email goes out at around 7 a.m. in the morning. This one on the blog just captures all changes. So if we have a look at this link, we've added that into the high conviction portfolio. Within that high conviction portfolio, we've closed Incitec Pivot. And if you've been following the blog for a while, you would know that Incitec's a stock that we've been buying. It's rallied 15% since it was added into the portfolio, and we've taken profit on that at the end of last week. NAB, just highlighting that they're doing a share buyback. We'll have a look at the share price of NAB a little bit later, but Macquarie still remains our preference, and in the ETF space, MVB, which is the Australian Bank ETF's under buy signal, and so is the global one, which is BNKS, and we'll have a look at that as well. CBA under buy signal, so just adding that to the post. CBA expects to do a $5 billion off-market buyback, or the market's anticipating that they will do post its result in August. This was the MVB, so this is the Australian Bank, so this is an ETF that just gives you broad exposure to all the banks. It's now under buy signal, so just highlighting that. But the other alternative there is the BetaShares Global Banks Etf, which is more of a diversified global bank strategy, but it's pulled back from just over $7 to around $6.20, shifted to buy signal there, and it's starting to move a little bit higher. So that's something that we've added into the model portfolio. To move further back through the blog, just draw your attention to these toggle icons at the bottom there. So the older articles, we can move back. So Crown was one that I highlighted. It's underneath the moving average. So the commentary here has just been continue to track Crown share price and wait for it to cross back above the 10-day average. So that's something that we just started to see a positive day today from Crown. The theory here really is, yes, we're obviously faced with these short-term trading impacts around COVID, but on the other side of that, does the business still remain attractive for the large offshore companies that have been interested in acquiring it, or even locally with Star considering a merger opportunity? And whilst both of those deals are off the table at the moment, I don't think Crown's completely off their radar. So the correction that we've had from $13 down to $8, just watch for that to cross back above that moving average is the thinking there. Link, as I mentioned earlier, moving through a little bit further. Bega Group, we like that, so have a look at that on your charts, make a note of that. So this is, you can see again, this is an automated post coming from our database. It's saying that the ASX signals for July 30, BGA was a long signal. You could click on that and it'll take you through to the chart. Interesting to see Bega's upcoming earnings result. We've set a small position in Bega at the moment, but we'll certainly review that with more focus following the upcoming earnings. The market's actually expecting earnings to be down about 7%, which is sort of explains the correction that we've seen from 650 down to 520. But I suspect that maybe we're getting a little bit oversold coming into this earnings result. But again, we'll review that in more detail following those results. On the Nasdaq, we've had so again, the list heading changes here from Nasdaq, or from prior we were looking at ASX high conviction. Now the list is Nasdaq 100. It's an open position, VeriSign, and the buy price Gold Roads, and we keep moving back down. So Seek, and as I toggle through some of the stocks in the model portfolios, we'll see these. ATEC, which is the Beta Share Australian Technology ETF, you can see there that the list that's been added to is the ASX All ETF, and that was a buy signal at 21.90. The Vanguard MSCI Index International Shares ETF, that was also added, so you can see that it switched from sell conditions into buy conditions, and it was added into the model portfolio. And now you've got the toggles both ways to keep going back through older articles, or obviously new articles would be shifting back to where we started. So just a reminder, if you haven't spent much time or familiar with the blog, 11 a.m. each morning you'd be getting an email of what's posted on the blog, or you can log into the member area and view that through the news button. So tonight I'm just going to skip through a few different lists. First of all, what we'll do is come into the watch list, hit the drop down, and we're going to select recent blog posts. This stores all the stocks that have been tagged on the blog in the last 30 days, and I'll move through these fairly quickly because some of them we'll revisit when we look at the model portfolios. I get the percentage gains to the top. Come over here, shift them into buy signal. So I'm going to move through all the stocks that are under buy conditions, and then we'll get to ones that are under sell. That's the way that I like to look at the watch list when I'm putting it in order. So PEXA Group, let's start with that. As we mentioned earlier, that's under buy conditions, and we like that at the moment. The SNAS, which is the short Nasdaq, I wouldn't bother too much with this until we see that Nasdaq break down and make a lower low, lower high, and I'll draw your attention to that when that time arises. Sunrise Energy, this is a speculative play in the market, high or low there at around that $1.75. Over the next 6 months, I suspect that they will identify a funding partner which should support their share price. There are risks to the balance sheet, and the company needs a substantial offshore investor. Uh, but at these levels, at around $1.75, risk reward looks reasonably attractive there. Gold Roads we like, but Northern Star's preference over Gold Road. ANZ Bank. So we've recently seen ANZ and Westpac shift to algorithm buy signals. So we've now got Macquarie, CBA, ANZ, Westpac under buy. We've now got the BNKS Global Banks ETF, and we've got the MVB, which is the Australian Bank ETF. So you can have a think about how you want to mix that up. Our preference at the moment really remains Macquarie and the Global Banks ETF. Obviously, you're giving up some of the dividend yield and franking credits if you pursue that Global Banks ETF. But ANZ now under buy conditions. The BetaShares Global Robotics Etf. So this is just highlighting that it's shifted to algorithm buy signals, creating the higher low formation there at 1285, and we've had a more recent signal here at around this 1360 level. The iShares Asia, so buying that at the moment at around this 114 level, as discussed ahead of Alibaba's results. Northern Star remains our preferred gold exposure. The Van Eyck Video Gaming ETF, just drawing your attention to that now under buy conditions. Within the energy space, Woodside Petroleum still remains our preference. We've obviously got Santos and Oil Search under buy conditions. You've seen in the media that the takeover bid for Oil Search looks like it's now going to go ahead. So Santos merging with Oil Search. We still prefer Woodside at this point in time. Vanguard Global International Shares, and this is hedged. So you're not taking on any FX exposure around this, but just highlighting that it's switched to algorithm buy signals there just below $85. The SLF, this still remains our strategy, if you've been following the recordings, has been to stay long Goodman Group, and rather than adding too many other REITs into the portfolio, we've diversified the REIT exposure by holding this SLF ETF. So that still remains the case, although Goodman Group is getting fairly expensive up where it is at the moment, but SLF gives you diversified exposure to the REIT sector. Link, as I touched on earlier, I think there's a space for that in portfolios at these levels, as well as adding PEXA as a consideration as well. Santos merging with Oil Search, and owning Woodside still is our preference, but certainly only owning Santos should be attractive given the cost out benefits of the merger and new development opportunities or new production opportunities coming online. Macquarie still our preferred allocation within the financials. MVB is another alternative, or the BNKS. Collins Food, we've been holders of this, looking for upside up towards around $12 before we take profit there. There's the MVB Bank ETFs. As I mentioned, it's corrected from around 31 down to 28.35 thereabouts, 28.30, now pushing back up. We've added some of that into portfolios, as well as this one here, which is the Global Banks ETF, the BetaShare Global Banks, the code's BNKS, corrected from around 720 down to 620, and we've added some small exposure there. Still keeping the position size relatively small within that banking space at the moment. Cleanaway we like. We think this is a fairly defensive, low risk exposure coming into earnings. Given that we're only a week or two away from starting to see the earnings results come through, having some exposure ahead of the results and then adding to the positions after, the financial turnaround or the financial strength of the business, depending on what the opportunity may be, is confirmed, makes sense. But Cleanaway we like, following the current sell-off. Lendlease, long-term recovery play. I've highlighted the significant fall in earnings that we've seen there. We've obviously got difficult trading conditions for them globally. But if we were to look out 12, 24, 36 months, the Lend-Lease business, do we start to see better performance? And I suspect so. So I think Lend-Lease is something that we're comfortable just holding in portfolios at the moment and waiting for the recovery. Sydney Airports, under algorithm buy signals, we've been holding that. It's one of the better performing stocks in the portfolio. OZR, so this is again, we're just reviewing everything that's been flagged on the blog in the last 30 days. OZR was an alternative. Our preference still remains Fortescue, BHP, and Fortescue, BHP, and let's just have a quick look. It slipped my mind. So we're just going into, so we hold BHP in the model, Fortescue, obviously Incitec Pivot, which we've now taken profit on. Oz Minerals is the other resource exposure that we've remained focused on. The alternative to owning those individual stocks has been this OZR. So I've spoken about this, and that comes about from the shift from sell conditions into algorithm buys. They're at around 13.25, so it's rallied, not quite, but roughly about 8% since that buy signal. Aristocrat Leisure, just want to make sure we're working. So we've come down, we've gone through Sydney Airport, so we're just covered off on OZR. So Oz Minerals, highlighting here the shift from sell conditions into buy conditions. Support there at around $20, now pushing up towards 23. The Bear ETF, so again, I wouldn't do too much on that until we see a breakdown in the index, lower low, lower high, and then we'll have a look at the inverse products. Insurance Australia Group, this is really a recovery play opportunity in the market. The channel that's really moving in is resistance at around 545, support there really around 420. It's kind of in the midpoint of that at the moment. The company has guided towards improving margins and about 8% earnings growth over the next 12 months. That may be enough for it to underwrite sort of this downtrend that's been in place and start to see a recovery. So the first thing we're looking for here is obviously a takeout of that $5.30 high, and later this year, if we were to see a rally back up and a retracement, we'd expect to see this shift from sell conditions into buy conditions, and I suspect that we'll see that added into portfolios in the back half of this year. So that was just a toggle through for the blog. So again, just as a reminder, if you've missed something that's been put on the blog, or you're just wanting to backtrack and revisit the stocks that have been covered, click on recent blog posts, go to the charts, toggle through them, and you can revise those stocks that are covered in that. So on model portfolios, there's a few different lists here. If I was to toggle through the top 20, the way that I like to look at this is get the days held to the top. So the least number of days in this case is ANZ was added 13 days ago. It's up 3.3. Westpac was added 18 days ago. And I could simply come into this list and toggle through each of those. And you can familiarize yourself with the charts and the period that the algorithm was triggered. What I'm going to do tonight is not cover each one individually. We're just going to go straight into the top 100, and we're just going to have a look and revisit the stocks that are added in the top 100. So I'll do this, the layout, get the days held to the top, least number of days to the top, and we'll just move through these, and I'll share some quick commentary with you as I move through these. So the banks, as I mentioned, under algorithm buy signals, we're seeing return of capital. NAB's announced a $2.5 billion share buyback. CBA should be around $5 billion. Helps to underpin the downside risk, so there is some buying interest interest again in the banks at the moment. ANZ under buy conditions recently added to the model. Westpac under recent buy conditions, it's been added to the model. Crown Resorts under buy conditions. If you're looking for a trading opportunity in the market, track this, wait for it to cross above the moving average and think about taking action there. Tabcorp, we've got the upcoming split of Tabcorp. The wagering and lottery businesses will be separated. Should unlock a little bit of value for shareholders, but Tabcorp is fairly expensive where it's sitting at the moment, but is in the model portfolio. BHP's been a good performer. Obviously, as a backdrop, we're seeing iron ore move from 220 a tonne down to 180, so reasonable percentage correction there. In saying that, we haven't seen a big reaction to the share prices. The reason why is most analysts having their valuations a number around 160 to 170 for iron ore prices. So analysts weren't expecting iron ore to stay up at that 220 or 200 plus valuation. So we haven't seen a big impact on the iron ore names at the moment. But maybe anything less than around that 160, 150, I think starts to maybe flow through to some downgrades into the pricing models and forward projections, which would obviously then weigh on the share price. But for the moment, we're still sticking with BHP. Oz Minerals under buy conditions, and happy to be a buyer of that again on any softness. I'll continue to draw your attention to that on the blog. South 32 under buy conditions, that's performing well. IGO, so what we're looking at here is stocks that are added into the model portfolio automatically when they've shifted from sell conditions into buy conditions. If you want to be notified of that, just remember turn on the green envelope beside the list. So IGO in the model performing well. Santos in the model merging with Santos. Macquarie under algorithm buy signals, it's up about 5% since being added into the model. Incitec Pivot, I've taken profit on this in our high conviction portfolio, but it will now stay in the model, which could be for months or years, as long as it stays under buy conditions. So again, just to highlight what I'm referring to there, it's shifted from sell conditions into algorithm buy conditions. It will stay in the model until such time as it switches from the green conditions there up to the red. So that could mean that the stock will continue to make higher highs and higher lows for months or years and stay in the model portfolio. An example of that might be something say like Afterpay, which we'll have a look at as we toggle through these. Incitec Pivot in the model performing well, but from a shorter term trading standpoint, we've taken profit on that in the high conviction portfolio. Challenger under algorithm buy conditions in the model portfolio, not a stock that I'm doing much on myself. Treasury Wines under algorithm buy conditions performing well and likely to see a recovery underway here. So if you're holding Treasury, it continues to make higher highs and higher lows. Now, to get exposure to all these stocks in the model portfolio, you can open a brokerage account with us and we run these models automatically inside the brokerage account. So if you'd like to know more about that, please give me a call. Centre Group under algorithm buy conditions, if we're having to sort of pick out one or two stocks within these REITs, again the strategies being Goodman Group and the SLF, but there's a fair number of ETFs that have, a fair number of REITs that have made their way into the top 100 model. Oil Search under algorithm buy conditions, it's in the model as I mentioned earlier, subject to the merger with Santos now. ALS under buy conditions, it switched from sell into buy there at around $9, performing extremely well. Seek under buy conditions, I still think Seek's maybe a little bit expensive, but from a momentum standpoint, it's under algorithm buy conditions. Signal there at around $25, stock now pushing 30. Woodside Petroleum, our preferred energy play within the stocks that are under buy conditions. CBA performed very well, switching from sell conditions into buy there at around $80, now pushing over 100. Woolworths under buy conditions and continue to like that, especially in this current environment. Soul Pattinson under buy condition doing very well. Xero under buy, we like that, high quality business. Downer EDI supported around 340. You can certainly have a think about that down on support. BlueScope Steel's performed extremely well since being added into the model. Star Entertainment's in there. Charter Hall under buy conditions. Again, this has done well, switching from sell conditions into buy conditions there. Origin originally at around $13 and then again down here at around this $12 level, now pushing 16. Goodman Group, so that's been our preferred property exposure, and it's done very well, rallying from around $16 up to 22 where it sits at the moment. Mirvac Group under buy conditions, Aurora under buy and doing very well, WiseTech under algorithm buy signals. So all these are under buy signals, and they're part of the top one, or a part of the 100 model. Link now under buy conditions and in the model. GPT, another REIT, Lendlease in the model portfolio. Stocklands under buy conditions. There's a recent algo signal there in Stocklands to have a think about. Cochlear's performed very well. Just to jump back to Cochlear, so it's one of the better performing stocks in the model. It's rallied from 190 up to 250. LTM Group under buy conditions. As I mentioned in prior weeks, we've seen the takeover bid from Autodesk in the US, which caused the stock price to rally. Autodesk has now stepped away from that takeover offer. Evolution Mining under buy conditions, preference still Northern Star. Domino Pizzas, terrific business, and we look to add that further into portfolios on the next buy signal. But just jumping back to Domino's, so it originally shifted to buy conditions there at around 71, now pushing 118. Aristocrat's done very well, switching from sell into buy at around $30, now pushing 41. Harvey Norman under buy conditions, performing very well. Metcash under buy. Linus Rare Earth Limited was recently added into the model portfolios, performing well. Cleanaway, just jumping back to Cleanaway, just highlighting there the original shift into the model portfolios from the sell signal into the buy. The subsequent algo signals here have performed well, and we've got a more recent correction from sort of roughly that $3 level down to $2.50, and we'll review the upcoming earnings with a great deal of interest there. Computershare switch from sell conditions into buy. The last three signals the stock's performed well, even here at around $15. I think Computershare and Link look attractive. REA's perform well, switching from sell conditions into buy, and the subsequent signal there at 130, now pushing 160. As I've discussed, some of these tech stocks are getting expensive, but the market's willing to pay high PEs at the moment. Wesfarmers, this is our largest weighted stock in the model portfolios. The switch from sell conditions here into buy, and it's performed extremely well, now pushing up towards $62. Cube Holdings under buy conditions, even taking a closer look if you don't hold this at the moment, but around that 294 level is a good entry level. Beach Energy under buy conditions. IDP. Fortescue's performed extremely well, so just backtracking there to Fortescue, as I mentioned, so we were talking about Incitec Pivot. A stock can effectively go from a sell signal into a buy condition, and it can stay under those buy conditions for many months or even years. And it's not until the stock rolls over and makes a lower low and lower high that you'll see it shift into sell signal. So the stock will stay in the model portfolio as long as it remains under those buy conditions. And I'll summarise sort of some of those holding times in a moment. Sydney Airport's under buy conditions. We like that. ResMed, one of the better performing stocks. If we look at the history of this, switched from sell conditions into buy conditions in 2018. We can see here that it's been dominated by subsequent buy signals, still making higher highs, higher lows. So again, it's not until that rolled over that it'll be removed from the model. JB Hi-Fi doing extremely well under buy conditions. Northern Star, we see that that's a little bit of a discount at around $10, and we think that looks attractive. ANZ, so it takes us back to the beginning. So just to recap how to look at these model portfolios. So the days held is my preference for the order of it, and just coming through here you can see the percentage gain, which includes the dividends accumulated during the holding period. Another way to arrange this would be to have a look at the percentage gain or fall. So the best performing stock in the portfolio is Northern Star, Fortescue, JB Hi-Fi, ResMed's done extremely well. You can see here the dates. So in the case of ResMed, it was added in 2018, and it's up 147%, and it tracks the amount of the dividends and the days that have been held. As far as the stocks that are underperforming, Beach Energy's underperforming, so is Crown, Evolution, Woodside, Lendlease. Lendlease, some of these are a little marginal. But in general, if we look at the performance of the portfolio, the winners certainly outweigh any of the losses. So Beach Energy could be a recovery play within that energy space, and likewise with Crown. In addition to the ASX 100, in your own time, you may like to come in and have a look through the ETFs, and there's two ETF portfolios. There's the ASX All ETFs, which looks at all the ETFs listed on the ASX and creates a model portfolio. So you can see here the recent additions. MVB, as I mentioned earlier, has been added into the model. There was the Vanguard International Shares Hedged, which I spent a little bit of time on, moving through some of these other ones. The iShares S&P Small Ordinaries ETF. So you can toggle through those in your own time, have a look at them. Separate to the All ETF is this one here, which is the ASX iShares. And in this case, what we're doing is just looking at the iShare ETFs listed on the ASX, and just creating a model portfolio of, out of the iShares, which ones are under algorithm buy conditions. And the most recent addition there was the iShares Small Ordinaries ETF, which has been in there 27 days. The longest held stock in this model is the iShares S&P 500, which has been in there for a little over 3,000 days, up 352%. So again, if you'd like to follow these model portfolios or set up a brokerage account, our most popular ones that we manage money for clients is tracking the ASX Top 50, the ASX High Conviction, and the iShares ETF. So a combination, either it could just be one of those, or it could be a combination of money spread across those strategies, has been delivering very good returns. So if you'd like to know more about that, please give me a call. Thank you for listening in tonight. Next week we'll revert back to the usual coverage of the ASX 100. I look forward to speaking then.